to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, welcome back, everyone, to another episode of the AJ Brown Show. My name is Cyprian Francis, and as always, the founder and brain trust of Trading Trainer, AJ Brown. Good morning, AJ.
Hey, man, how you doing? Yeah,
I'm-
they wanted me to go to England to take up my throne, but I let Charles do it, man.
Yeah, you're the all-American guy.
Yeah.
I don't know if you would fit in over there with all the fish and chips.
Too soon. Maybe it's too soon. People are still mourning the queen, right?
Yeah, that's the big news as of yesterday, right? I mean, it's kind of taking over since we don't have much else to talk about.
There really hasn't been a lot of economic news released. There was the Beige report on Wednesday, which is the raw data that they released to the public that goes to the Fed in 2 weeks so that the Fed can have their meeting. But it didn't really say anything significant that moved the market. So,
yeah, and as you can see by our background, we've got the lovely autumn leaves since we are starting to come around to getting out of the summer doldrums. I believe next week we'll start to get a little bit more action. Everybody's coming back from vacation. What are you doing? How are you positioning? What are we looking at? What is on your mind? Where should we even begin getting members, our viewers, on pace to start, taking advantage of any opportunities?
yeah, let's start with the broad market, right? So a couple of things is savings. So I've been watching people's savings, right? And savings, the average person's, the average American's savings is at an all-time low, right? And so what that means is despite the tightening of interest rates and despite, the hints that the Fed is giving everybody to put money into savings, people are still spending at a record pace. They're spending, we were talking a couple weeks ago about how a lot of money is going into like restaurants and services and massages and things that people can do more comfortably now that they feel that the pandemic is behind them. But we're still seeing a lot of goods being sold, and we're seeing a lot of those retailers. Target was in the news because they're one of those people who didn't have anything because people bought so much. And so they forecasted to buy a whole bunch of stuff, and they bought a whole bunch of stuff, and then their inventories ballooned, and they kind of bought stuff that people didn't want. And so then they had to like liquidate this, and their company's been going on ups and downs, but people are still buying like crazy, and their savings are at record low, which kind of explains, if we take a look at this chart, it kind of explains kind of this optimism. If people are still buying despite all the hints that the Fed is giving that you should be saving more at this point, it kind of explains that when there's no news out there and investors come back after the summer doldrums, after this Monday holiday, which is when investors kind of sit back down in their seats, they're done with their August vacations. Man, they just are so optimistic. So we actually got a confirmation that our bottom from Wednesday or even Tuesday, I apologize, that's Tuesday, holds through. Let me zoom in a little bit because I like to look at these retracements. So we actually believe that our uptrend started back here, and that was on July 7th. But this first little move that we would consider part of our uptrend, because we had such a move up between July 14th and August 16th, because it covered so much territory, this kind of negates this first move as one of those moves to define a mature trend. So that's a lot of mumbo jumbo, to be honest. But what I'm trying to say is we had such a high movement, and then we had this pullback, and this pullback is a little bit more than what I would have wanted ideally, right? Because an ideal pullback would have us stopping kind of in this center area, so right around this zone, and we kind of overshot it a little bit. but it's still considered part of an uptrend. But it kind of, like I said, this is no longer a reference for us. So we need yet another movement in the up direction to really solidify this current uptrend, for us to feel comfortable to start trading, in the uptrend direction. And so, kind of to just summarize this, if I change around my ruler stick to the most recent move, which I'm going to do right now, from here to here, I kind of need to see. It's not that I shouldn't be that. I need to see us get above $4,400. If in this next move, SIP, we move above 4,400 in the S&P 500, then I'll be convinced that we're actually, this optimism, this perpetual optimism that Americans have, where they don't care what's happening. They're going to keep their buying. They're going to keep spending, and they're, let it be damned, they're not going to save money. That's going to convince me and have me kind of change my trading. One last thing to take a look at is the VIX. Even the VIX, we saw the VIX last week start to go high again, but man, it's coming right back down quite quickly. And that, the VIX is the measurement of what kind of uncertainty and fear people have. The only thing I got to say, SIP, is, man, the Fed is selling bonds. Right, they reemphasized a couple weeks ago at their Jackson Hole, Wyoming annual vacay that they're gonna not only sell more bonds, they're gonna sell bonds at an increased rate. You can see that this curve, and this isn't even the top. If I go back 6 months, you can see it was even higher. They started selling gradually, and it started to go even more. And I just looked at the report that came out last evening. And just between this last data point here that they have on their graph and what happened last week, they sold another 50 billion. They're down at 8 point something like 8.7. I think it's $8.78 trillion. So they keep whittling this down, and that does have like a tangible effect on the returns that investors make in bonds, and it kind of gets people to more look at bonds. And so this optimism, I don't know how it's lasting, but something's got to break at some point, in my opinion. But again, I'm keeping my eye on $4,400 on the S&P 500. If I hit that before I reverse or go higher than that, then I'll be convinced. Until I hit that in this current move, then I'm still going to stick with my current trading, which is sideways choppy trading.
Yeah, and I'm looking ahead at the economic calendar to see if there's any potential catalysts, and we've got CPI next week, which could, it is going to give us an update on the inflation story. And then we will have a Fed meeting
at the end of the month.
Which could also be a catalyst to provide us with some more information. But you're right; it is very interesting to see this rally without really much
cause
behind it, right?
We're just freaking optimistic here in the United States. We just like to spend our money and not, why would we want to invest it and have like $5 grow to $75 in 30 years when we can buy a Starbucks coffee right now?
Well, it's a whole nother debate of the American consumer. You can love them or you can hate them. But the fact that people are spending, it might help the economy get through some of these recessionary trends. So we'll definitely keep an eye on that. In the meantime, if anybody watching or listening has a name or a stock or a ticker that you want AJ to run through, feel free to drop it in the chat. We'll see if we can get through it. If you're new to the channel, AJ does have a daily workshop where he's going to go over all of his strategies and, just his approach to the markets over the last 18 plus years. I'm going to go ahead and we'll go ahead and run our little commercial to invite everybody in there. I'll throw the link in the chat. Go ahead and check it out, and then we'll come back and we'll run through some names that we've got on our dashboard.
Let's do it.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, AJ, our first name, I think a lot of people are very familiar with, and that is Bank of America, ticker symbol BAC.
Yeah, this one is on my radar because it just gave me a signal in the last couple of days, as you can see here. So if I kind of zoom into the last 3 months, you can see that just last night I got a signal, and I'm looking to see if today's the day I want to either buy some of the Bank of America stock or more than likely buy some substitute option like a call option that would behave. So I'm going to go deeper in the money and farther out in time. I'd like to aim for that trading at parity. Because Bank of America, if we zoom out a little bit, you can see that they're forming that pattern like where they've got, tested support, tested resistance. They've got this oscillation that I need to leg into my gains, right? When I leg into a position, and everybody should take a note on this right now, that really changes a marginal gain position to like a supercharged position. And it kind of makes sense, right? Anytime we want to do buying, we want to buy low. And anytime we want to do selling, we want to, sell high. So if you've got a 2-leg option position, do the buying parts when the underlying symbol is low and do the selling parts when the underlying symbol is high. And that spread is going to change like a 3%, 4% returning position to something like a double-digit return.
And you don't have any specific timelines, specific contracts. What does the option flow look like?
Sure. Yeah. Let's take a look. So I could, if I get my confirmation to this signal today, and if I don't get it today, I'll look again on Monday. I could just buy Bank of America stock, right? It's not so expensive. Right now it's trading at $34.95 a share. And I'm going to buy them in lots of 100 shares because that then allows me to use my option strategies. So for $35, I'll need to have about $3,500 in my account. And that, don't forget to factor in the expense of the risk. So if your account is only $3,500, it doesn't mean you can buy, you can afford this. You need to make sure that you evaluate the risk and that you can afford the risk. Okay, all disclaimers aside, I can buy, the stock, or, I want to have an option that kind of sticks around. And so I want to go far enough out in time, and I'm looking at the option series here. They've got Bank of America is a very popular stock, and therefore it's also a very popular option chain. I'm kind of looking at this April or this June 2023 option. If I look at the April option looks like it just was made available to trade, and people haven't really quite picked up on it yet, because you can see the open interest is 0 and the bid-ask spread. Bid-ask spread isn't that bad, but the open interest in both the call and the put side is kind of 0. One guy, looks like one person did a trade right here at the $30 strike price on the put side, basically hedging his bet. He bought 2,405 contracts, but otherwise you can see it's a whole bunch of zeros. Let's take a look at the June option. This is the June 60. Okay, there you go. Now, the June option's been around. You can see that there's a lot of open interest. People have been trading it. If you wanted to trade the June option, there would be people to buy and sell with. And so I'd go deep enough in the money, maybe with a $20 or a $25 strike price. You could go ahead and measure how much of the price of the option is actually intrinsic versus extrinsic value. You want to kind of minimize the extrinsic as much as you can. But yeah, I'd buy probably, it looks like I can get for less than half price this $20 strike price option. It looks like it's trading at around $15.42. I could buy that option and it's going to act just like the stock, but for less than half the price. Again, I want to make sure I price in the risk, but this is probably the type of leverage I want to do right now. Then the next step is to wait for this thing to top out. Now, if it shoots to the sky, when it tops out, I'm simply going to sell it and take the profits and run because it's a directional position. But if it kind of just tops out around $38, $39 or even lower, then I'm going to just sell premium against it, buy protection against it, and turn it into one of my income positions that I've been talking about for all these months.
Sure. And I have a question. Since Bank of America is considered a financial company, in a raising interest rate environment, do financial companies tend to perform better than otherwise?
They do, right? And it depends on the individual financial company, of course, how they balance their books, because banks have figured out ways to make money on us in all different ways. It's not as simple as, they they loan out your money and then they pay you an interest rate and they loan it for a higher interest rate and they make money on the spread. That was like banking from, when I was a kid. Now they've got all these different products and Heliox and things like this. So they make money in all different ways, especially on penalty fees when people don't read the fine print and let their account drop below a value. So it does depend on the particular financial institution, but in general, yes. When interest rates go up, they can raise their loan interest rate up, and that spread between the two gets larger. So banks, when the interest rates go up, actually, it's not a fixed amount, right? It's not like whether the interest rate is down at 0.25% or at 2%. It tends to be more of a sliding scale, and it does tend that banks in general make more money when interest rates are higher.
All right, so we'll definitely keep an eye on this setup. Thank you for bringing that to the attention.
One other thing, Sip, right, when you set up that initial covering position that I'm talking about getting in here, you kind of set up the flavor of the trade, right? And so if Bank of America is positioned well to gain in the long term, buying the stock and or buying a call option that is far out in time and deep in the money that's going to act like the stock is a good buy for not only selling the premium like we like to do month by month, but also appreciating in the long term on the back end. So we want to figure out when we do these option positions a way to profit on all of it, like month to month and on the back end. And that would be a good way to set this up.
Sure. I meant this is checking a lot of the boxes for the things that you like to look at for a solid a premium selling trade. So we'll keep that on the radar. Moving on to our next name. This is a company that I'm not very familiar with. Monolithic Power System, ticker symbol MPC. This one comes from Tiny in Seattle.
Yeah, I've had Tiny call into the Trading Trainer office. And he sent a picture, or he's got an avatar in our web portal, and he doesn't seem so tiny. This cool thing about no, it's not. I don't think that's Marathon Petroleum Corp. Maybe I gave you the wrong ticker. Monolithic Power. I don't think it's MPC. Let me see here. I did put MPC, but that's Marathon Petroleum Corp, right, which is another one. Let's see if I can find.
So it's MPWR.
Oh, gosh. I apologize. Yes, this is it. Okay. So Monolithic Power. It's got that beautiful pattern, Sip, but look at how expensive it is. It's up here in the $400 range. So buying these shares of stock or even shorting these shares of stock, or even finding, like, for instance, a option trading at parity, it's going to be priced out of most of our, unless you have more, like, because think about it. The stock is almost $450. You need to buy it in lots of 100. So $450 is $45,000 per contract. And that's got to price in the risk. So say, for instance, the risk is 10%, which is a good rule of thumb. Wow, you're talking about having at least a $500,000 portfolio just to do one contract, the way that we traditionally do it. So we could think of some different strategies, but and what's coming to mind is possibly like a condor or a vertical spread. I worry about vertical spreads, though, because people get wooed by how inexpensive they are. So when I say vertical spread, what I'm talking about is taking two options. It's a two-leg option strategy, and the two legs expire on the same day, and there's just a difference between the strike prices. So, for instance, I might buy this $400 call. And so the $400 call, if I highlight it, is going for $41.20. And then I would immediately sell back. I'm sorry, I highlighted the 410. The 400 is going for $50.95, but then I would immediately sell back the 410. And so it would really only cost me about $9 per option share, or $900 per contract. And so that's way more affordable than $45,000. And so a lot of people get wooed by that cheap price. But I've kind of been ringing through today, Sip, with the thought that you got to price in the risk. And the risk on that $900 is way more than the risk on that $45,000. In fact, in reality, you're pretty much risking that whole $900. So if you want to keep your portfolio risk, the amount that you might lose on any one position to your overall portfolio low, just assume you're going to lose the whole amount in that vertical spread. So make sure that you can lose that $900, or let's just round it to $1,000. Make sure you can lose that $1,000 and not be sorry about it, because vertical spreads can change on the dime. So I would almost say that you might make sure that you have at least a $50,000 portfolio before you do vertical spreads on that. If you lose that $1,000, that's just, basically about 5% of did I do the math right? Is that 5%? That $1,000 of $50,000. I think that's 2%. That's 2% of your portfolio, which I think for most people would be an okay loss. Don't think that this vertical spread, because it's $900, you could buy a whole bunch of these if you have a small portfolio. Because if you have a $10,000 portfolio and that thing goes to zero, man, you just lost 10% of your portfolio for every contract you bought. You wipe yourself out.
Yeah. And Tiny, if you're watching, and if you've been watching the show, we've got a lot more opportunities for cheaper names to take very similar plays. So you might want to consider it. But I also feel like it's rare that there's stocks that are these expensive. Like, there's not that many that are this expensive. And it might be even better just to avoid some of, 400, putting up this capital for one trade. So we'll keep an eye on that. Moving on to our next name. This is one that I think is kind of new to our radar. We haven't really gone down the road of treasury bond ETFs, but this one comes from one of our TikTok followers, Trader Blondie, who actually has a very interesting channel herself, if anybody wants to go check it out. But she wants to know your input on the iShares 20-year treasury bond ETF, ticker symbol TLT.
Man, ETFs allow us, that's short for exchange traded funds. They allow us to get into all sorts of things above and beyond just stocks, right? And so this, there's an ETF that actually lets us follow along with cryptocurrencies. This particular ETF follows along with treasury bonds. So we've been talking a lot about the Fed selling bonds. And when the Fed sells their bonds, they basically are doing the opposite of diluting. They're actually concentrating the interest rates on bonds. They're raising the interest rate on bonds every time they sell a tranche of their bond purchase. So bonds are going up, and so you might be and this is specifically the 20-year treasury bond. So you may or may not see this ETF go up or down when the Fed, it's not a direct one-to-one relationship. But as you can see, this also is a really nice kind of representation of how the bond market is going. And so, yeah, and the beautiful part about this ETF is that it's traded like a stock, right? You do the same sort of transactions through your broker tools in order to buy and sell shares of this, and it's optionable. In fact, there's a very healthy options market on the TLT. So I like all that. It's, again, a little bit on the pricey side for setting up legged in diagonal debit spreads where the back end month is a option trading at parity. And I'm not sure I want to own this ETF. I don't need to have this ETF in the long term. So I might want to buy some call options. So again, just make sure you're pricing in the risk. But yeah, it looks like, and I've got my fast MACD indicator down here at the bottom. It looks like I'm about to get some sort of signal that a bottom has been found in this particular ETF. I want to go ahead and kind of brush up on the whole bond and how this ETF relates to the bond market. But if indeed a solid bottom is being found, that's a buy opportunity for doing a covered call, doing a bull call diagonal debit spread, a bull call vertical spread, debit spread. You could do credit spreads. So yeah, there's a lot of opportunity. And again, one of the beautiful parts about ETFs is that there's a lot of folks who trade them, and there's a lot of folks who trade the options on them. You never have to worry about liquidity with an ETF like the iShares.
I have a question, kind of referencing back to that very first Fed bond selling chart. How does that correlate to what we're seeing here, right? Because if the assumption is that they're going to continue to sell bonds, how does that affect that 20-year?
Yeah, and so they bought a whole bunch, especially most recently. So if we go back to the graph, most recently, and I'm going to go back to all the data. Most recently, I'm getting my magic marker here. Most recently, right here during the COVID pandemic, they spread out the type of bonds they were buying from very secure treasury bonds to include also mortgage bonds. And then they even started to buy corporate bonds. And so the specificity of the TLT is that it's just the 20-year treasury bond. And so it's not going to be a direct relationship, meaning when they sell this, the 20-year treasury bond isn't naturally going to have a spike. What I'd need to do, Sip, since I'm this isn't one that I trade often, is I'd have to go refresh kind of my insights onto how the TLT is actually related to what's on the Fed balance sheet. But overall, we probably are going to be seeing the TLT make some moves up as the Fed continues to sell some of these bonds. But it's not a direct correlation. So I wish it was. It would be easier to explain.
Yeah, as a trader myself, I get a little thrown off with the 2 year, the 5 year, the 10 year, the 20 year, and like why one moves more or less than the other. And I don't know. It's an interesting phenomenon for some of these big dogs, I guess.
Yeah, and the Fed basically with their interest rates, they talk about raising interest rates. That's the overnight rate, and so it then comes down to how many people, based on the overnight rate, how many people are interested in investing in a rate that returns in 2 years, 5 years, 10 years, and so on. And so it becomes kind of this demand, and it kind of gives you an idea, like if people are willing to invest in the long term, like 20 years, they're going to they think that they're going to get a better return in the 20-year. Things go well. You might hear about when the bond uh, uh, returns cross, meaning more people are investing in short-term debt and then instead of long-term debt. And that usually causes an economy to go topsy-turvy. And so the Fed tries not to let that happen. They want people to believe that if they put their money away and don't look at it for 10 years, 20 years into a bond, that they'll do better than if you only put your money into a 2-year bond. So they try to manipulate the switches that they have so that those different bond yields stack stock like this. But every once in a while, you'll hear that short-term debt is actually paying better than the 20-year or 10-year treasury bond. And that kind of freaks people out because that means that money isn't going to be, putting money away doesn't work the way that you would expect it to.
Right. Okay, we got a live question. We got a ticker request. This one's from our, dedicated viewer Timothy. He's wanting to know your opinion on ticker symbol VALE, VALE.
VALE.
That's right.
Yeah.
VALE SA, American Depository.
Neat. Okay. So I see tested support at $12. I see tested resistance at about $13.75. I see that it's been in this since about July 15th. So not very long has it been in this sideways channel. And I also am seeing that it's kind of a fast mover, meaning it moves from support down to resistance quite quickly. Like I'm looking at the signals in the fast MACD, and like I get this signal, the bottom has been found, and I look over here and it looks like that it moved from the bottom to the top of the channel in just that one move. So at the minute I get my signal found, one of the things that we try to look for, if you can imagine something that's trading sideways, is that we can get our entry signals on bottoms and tops on the correct side of the center line. In other words, if I get a signal that a bottom has been found, and usually these signals come a little bit after a bottom has been found because it's almost impossible to know that you're in a bottom until you're looking at it in the rear view mirror. So you're usually up here when you finally get the signal that a bottom has been found. What you don't want to have happen is that you finally got a signal that the bottom has been found and you're in this upper half of the channel, or vice versa. You don't want to find out that a top has been found, and when you finally get notified that a top has been found, you've already crossed down below the center point of the channel. So one of the things I look for when I want to get into a nice legging in position is that when I look at previous signals on how tops and bottoms were found, when I get my signal, if I look up and the price action is already halfway across the channel or more, I'm like, this is going to be a pain in the ass to trade. And I kind of get that feeling from VALE that it's a little bit difficult for me to trade, at least with these basic signals. Maybe there's another source of signals that would give you a faster signal for identifying the tops and the bottoms. But with this signal that I've got plugged into my charting software right here, I don't seem to see that I would get fast enough signal. And worries about fast signals is when you get faster signals, they tend to be less reliable. You tend to get more false positives. Like, it gives you a signal, but the reliability of that signal goes down. So I'm not as excited about Vail. I might want to see that the sideways movement continues for a couple more months. And maybe I research some different ways to identify tops and bottoms. And maybe a hint is to kind of look at the quantitative analysis, get yourself a subscription to NASDAQ level 4 data and see if you can identify when the big market movers start buying and selling with their accumulation and distribution. But yeah, that's kind of my fear. It looks like by the time I get my signal that a bottom has been found, I'm already at top.
All right, great analysis. Thank you for that question, Tim. Moving on to our next name. This is a company business that I'm familiar with, Box, ticker symbol BOX. This is from Conrad in San Luis Obispo. Box.
Oh, San Luis Obispo in California. That is, I actually drove through that in my visit just recently. It's halfway between LA and San Francisco. And it's a college town, and it's kind of cool. And if you go west to the coast, that's Morro Bay and Cambria. There's a little beach town there called Cambria, and I could see myself retiring in Cambria. Anybody have a place there, you're welcome to invite me to come visit. So here we are. I like this a lot. I'm looking at this sideways pattern. Whenever I look at a sideways choppy pattern, a lot of people would say, I can't trade that. That thing is not going to be giving me any directional returns the traditional way to trade. But when I see it, I see money, Sip. The scoop is that I could sell premium on this. What's nice about Box is that it's kind of back to that discussion we just had on Vail. I mean, when you identify a top, you've got all this. You're nowhere near the center, and then this is a trade that I might give to like one of my beginning premium sellers, because you could be so sloppy with the entry and the exit. You could miss it. It looks like you could actually miss the entry and exit by like a week. That's what I mean about, being so nonchalant. You can miss the signal. Like, if you get the signal, you could actually come by next week and still make the trade work for you. The only, what active traders don't like is that there's a lot of waiting in between signals. There might be as much as like 2 months of waiting before you get the next signal. But man, this would be a trade that I would give a beginning premium seller, a beginning options trader to trade, because it doesn't look like you can mess it up. And it looks like, according to here, I have found a bottom, and it looks like today or Monday would be a great opportunity to buy some of this stock or buy some of the substitute option. So I totally, for our viewer in San Luis Obispo, I totally would jump on this one. And Box is like what is it? A premium service of like a Google Drive, right? They're really good quality cloud storage. So cloud storage isn't going anywhere. Everything is running in the clouds these days. So I totally would jump on this bandwagon. Would you do this one, Sip?
Well, my only concern is that bottom is a little choppy, right? Like you said, like you showed how it kind of broke there, and then now we're like in that middle of the channel. So that from your previous example, that's the only thing that's kind of coming to my attention.
Yeah, let's see if I look at a bigger picture, and this is what a lot of our folks are. A lot of our folks only look at like the last, you got sometimes you have to step back. And when I step back here,
Like that
you know,
$26 seems to be like a nice little
yeah,
bottom.
yeah, 26 or even 25.50. And then I would say that it turns out probably 29.50 is where we've got our solid resistance. And I don't know. Have you ever looked at a point and figure chart, Sip?
Yeah, but more so for like day active trading.
Interesting.
But I
Yeah.
am familiar.
Yeah. What I like about point and figure charts, and for anybody who's out there, there's a tool at stockcharts.com. I don't actually get any sort of kickback for recommending them, but I've been using this free tool for, gosh, 20 years. You click over here to point and figure and you type in the ticker. And what's really nice about point and figure charts is instead of giving us, when we look at a bar chart like this, each one of the bars represents a period of time. So in this case, it's a day. But in a figure chart, and let me kind of jigger some of these settings. I just want to make it a little bit bigger for you guys. So I'll set that to 1,000. And I also want to add in this volume by price. Let's see what that looks like. All right, that's a little bit easier to see. And I'll do this. Easier to see. So in this case, each one of these columns actually, point and figure chart doesn't increment to the next column until a top or a bottom, a reversal is found. And so it really helps us find the real lines of support and resistance. So for instance, if I draw a line across here, what I'm looking for is the most X's and O's in that line. That's a line where price likes to hang out. When it starts to get sparse, like down here at $23, and especially down here at $22, that's where I know that I'm kind of out of my price range. So $24 actually, according to the point and figure chart, is a good level of support. And coming on up here, it looks like it's more like $27 for my level of resistance. And so you can actually take those numbers and you can put them back on your bar chart, assuming I can bring it back. And so we were talking about actually coming on down here to $24. And coming up here to $27 instead of what this is saying. And so this actually out to the heavier lines of support and resistance based on the point and figure chart. And so that could give us some insights because it does look like more recently price is hanging up here. It's telling us that this is like no man's territory, and these levels of support and resistance up here at $31 may be a little bit cagey. And so that's something to keep in mind if you guys want to get into some more details about how support and resistance. These are like new territory. And you'll notice also, Sip, that I put that little added thing called price by volume over here in the so what this is showing is how much buying and selling occurred at each price. So again, price tends to go back into those sideways channels where there's been a lot of activity. So that just reinforces to me that any price action up here is like it hasn't really matured yet. There's hardly been any trading up there. It's all been down here. So you're right. That might give me a little bit of the heebie-jeebies. You got a good eye.
But I do like the premium selling opportunity in the long run. And as you said, it is an industry that it tends to be growth oriented. So they're not going to be losing demand anytime soon. So that's definitely a positive.
Yeah, and so with our trading strategy of legging into these positions, the initial position is a long-term position. So if you want to have box in your portfolio for the next months, next 8 months or more, then it doesn't even matter whether we can turn this into a premium trade or not. This is we're getting a buy opportunity to put box in our portfolio at a low price.
Sure. Awesome. Well, thank you, Conrad, for that recommendation. As always, if you have any tickers, any questions, feel free to drop it in the chat. Feel free to leave us a DM. I do want to give everyone an opportunity to check out AJ's coaching program, right? So
Yeah.
AJ just launched a new one-on-one coaching program where
we had to bring on a new coach. We brought on a new coach this week because we have been filling up our existing coaches' schedules and we wanted to still offer these. So we brought on a new coach, Justin, and he is super smart. So we can take on about 5 more clients until Justin's filled up.
Awesome. So I'm going to go ahead and drop the link in the chat. And so when you get to that page, you can just go ahead and schedule a date and time that works for you. Someone on AJ's team will reach out, have a conversation, talk to you about what you're trying to achieve, your goals, kind of like what portfolio you're working with, try and align what strategies might work with that. And there's a plethora of ways to approach it. And that's the beauty and what's wonderful about having a one-on-one coach is developing a style and a strategy that works with you. Anything you want to add to that?
Yeah, a lot of people don't know this, but the special sauce of the Trading Trainer program, coaching program that's different than any other coaching program is after you've done your coaching with our one-on-one coach, you're going to trade with us for 6 months, meaning you're going to meet with us every day for a few minutes before or after before the markets open or after the markets close, so that we can be telling you what we're doing and what you can tell us what you're about to do for the next session. So we actually are going to be trading with you for 6 months. And that way we don't just teach you something and then set you off on your own. We actually reinforce it by making you use it. And that's how come we can have a guarantee SIP. In our coaching program, we guarantee that whatever you pay for your coaching program, by the end of the coaching program, you're going to be on your way or have made that back. And that's because we spend 6 months with you day in and day out. And if you haven't made your money back that you paid on the coaching program, then we make sure that you still have access to our coaches until you do make it back. So that's how we do it. We trade with you. So a lot of people who have asked me, hey man, what are you trading? This is a good way for you to get right in there and trade with us. We look over your shoulder. We make sure you're not going to do anything crazy. Plus you get to see what the other people in the program and what we're trading as well. So that's kind of our special sauce, is not only to teach you and then send you on your way, but teach you and then make you use it until it becomes second nature. And we call it learn while you earn. It's kind of cool.
Sure. And the Trading Trainer community is fabulous. A lot of the members like to help each other, call out, identify positions, names that they see similar trends in. And at the end of the day, the goal here is to improve, any of the trading that you've been doing, or even just teach you how to trade if you've never really dove into it, specifically using the wonderful tool of options that AJ has perfected or has become a master in over 18 years now? 19. We're heading on 19.
Well, I've been running Trading Trainer since 2003. So we've been teaching it since 2003, but I started with my options career in 1997. So it's been 25 years for me since I've been doing it.
Yeah. So
which means I started when I was 3.
And that's why I tune in every week to educate myself in our lovely show. So with that, AJ, any final words? Anything we should be keeping an eye on going into next week?
Just keep your eye on this S&P. I'm telling you, put it all on your own charting packages or write it down on a Post-it note. Let's watch that 4,400 level and see if we attain that, because that will be kind of a game changer in how we move forward. But until then, premium's the way to go. It's always the way to go. So let's continue just situation normal and watch, but look at that 4,400 level on the S&P.
4,400. That's the level that we're watching. AJ, thank you for your time. Everyone watching, thank you for tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button, and we'll try and get you quality content as it comes along. So
tell your friends about the show.
Yeah, tell your friend, tell your grandma, tell your cousin, tell your brother, tell your sister-in-law.
Get them to sign up. We need more people. It would be wonderful to have more people watching our show.
Totally. All right, AJ, thank you for your time. Thank you, everybody, for tuning in. We'll catch you next week.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content